Welcome everyone. In this short episode we're going to explain surface level what a delta neutral position is and how it can be used as a way to mitigate risk and how it can be used to generate an income or how you can earn money from holding a delta neutral. Let's jump into it. So in this example we're going to assume that the asset that you're holding is Bitcoin or BTC. We're going to assume that it has a market price of $90,000 or the spot price, which is the market price. A delta neutral means that you go long and short the same asset. So in this example, we're going long one BTC and we're going short one BTC. We have now, by doing that, mitigated the risk of market volatility, or we have created a hedge, right? So we are now protected against if the asset move up and down in price, since we hold one long position and we hold one short position of the same size. How you earn money from a delta neutral is if there is more people holding a long position than there is a short position, then the long position holders need to pay a funding fee to the short position holders. And just if it was the opposite, right? So say that you had more people holding a short position than you had a long position, then the short position, being the majority, would have to pay a funding fee to the people holding the short position. And this is because you essentially manipulate the market price, right? If you have more people holding a short position, you are effectively dragging down the spot price to the new lower direction, right? In this example, I just put 89,000 and 91,000 as an example, right? So likewise, if you hold a long position and you are in the majority, then you are manipulating the price upwards. And because you are manipulating the spot price upwards, you need to pay funding fees to the people holding the opposite positions, so to the short holders. This is a very surface level explanation of what a delta neutral is, but hopefully this gives you a little bit of information on how it can be used as a way to mitigate risk and how it can be used as a way to earn essentially an income from it. And if we just quickly look at Mithril, we enable people to set delta neutrals very quickly and efficiently. So if you head to bot.mithril.money and click on delta neutral and scanner, you're going to be able to see all of the current opportunities that you have to open up a delta neutral. So here you have the token, here you have essentially the funding rate and the arbitrage between them, and what annual APY and daily APY that would produce. So essentially, if you took out this position, you would earn 60% APY per year. It's very unlikely that a delta neutral position that you would be able to hold it for 1 year. That's a very long time. So maybe a bit more accurately is to look at the daily APY, which a 0.1% is still very nice. A 0.8% is absolutely incredible. So hopefully this gave you a surface level understanding of what a delta neutral position is, how it can be used, and how you can quite easily set one up yourself if you're not really experienced with looking at the funding rates, looking at the spot price at different exchanges, because there could be a difference. BTC could cost $90,000 exactly on one exchange, and it could cost $89,990 on one exchange, and that creates a spread. So there's a bit more to it if you want to set up a delta neutral strategy yourself. So if you want the simpler way of setting one up, you can use the Mithril bot builder in the example that we've shown here. Thank you so much. All the best.